This week on Talking Business, Anushan Selvarajah speaks to the Group Managing Director of LOLC Holdings and the Deputy Chairman of Seylan Bank, Kapila Jayawardena.
Welcome to the show, Kapila. Good to have you with us.
Same here. Thank you for inviting me.
Now, LOLC has had an unprecedented few years. What has been the driver behind this?
Well, I think on many forums, people have asked me this question, and I have always said that we are a very strategic thinking organization. So a decade ago, more than a decade ago, we strategically decided that we shouldn't be putting all eggs in one basket, and that we should be moving overseas. So if you really look at our P&L, the major portion of our success, of our profit, comes from overseas operations. So we have a multitude, we operate in a multitude of countries by way of microfinance institutions, SME institutions. We have a few banks in some countries like the Philippines. So the key to our success has been our kind of rigorous growth in many sectors, in addition to the financial sector in Sri Lanka, and also our foray into the financial sector market in other countries. So if you ask me to summarize the key to our success, it is diversification, both in terms of within the country and outside the country.
The country is in recovery mode, Kapila. So how can a conglomerate like LOLC assist the country in this recovery?
Yes, if you really look at the country now, you are right. It's in a recovery mode after the problems we had in 2019 and also most part of 2020. So what our plan to help the recovery process is to improve the access to capital of our customers, and also to maximize the value of the capital that we have provided to them. So in accordance with the request from the government, from the central bank, we have given moratoriums to most of our SME and micro customer base, so that they can plan out their repayment schedules to the best of their ability. Because in the first half of the year they were severely affected. So it's now that they are getting back into business. So that getting back into business is what we are really working with them, and trying to find out a mutually beneficial way of servicing the debt. So that's just one side of the story. Then on the other hand, as I told you earlier, we are in a multitude of countries. So there's a lot of expertise that we can bring from these countries to help our customers. So that's something that we are working on. And actually, even more than that, the most valuable asset that we have is the linkages with our multilateral agencies. We have strong relationships with the largest multilateral agencies in the world. So right now we are talking to all of them to look at Sri Lanka, because they've been looking at only very few organizations within the country. So we are inviting them to look at Sri Lanka, telling them how successful this country has managed the COVID-19 pandemic. In fact, they are now all well aware of that, and we are inviting them to help us and the government and other agencies, other corporates like us, in rebuilding the economy.
Now, you're in the tourism industry as well. What is your take on the country opening up? Should we open up soon?
That is actually a very, very important question. Now, unfortunately, I cannot really answer that question directly, because whether we should open up or not should be kept, that decision should be completely made by the experts. That is the medical experts and the people who are actually involved in fighting, in getting the country back to normal from this pandemic. I personally believe that it's too early to open the airport. if we open the airport and have 2 weeks of quarantine for everybody who's walking in through the doors of the airport, then the leisure business is not going to be practical. I mean, no tourist is going to get to Sri Lanka and wait 2 weeks in a hotel inside the hotel room and then start going around, because they have other choices. So I think we have to be in a position where we are comfortable in opening the airport and inviting people to walk straight away into their leisure destinations. So that's a difficult question to answer, but I feel that we are still not ready to open the airport, because if you really look at the numbers, many Sri Lankans who are actually arriving from overseas are tested positive. So we really cannot take a chance. It's too early to take a chance at this stage.
What are the cons of steadily dropping interest rates?
Well, obviously, low interest rates always, the classical economists will always tell you, low interest rate environment will stimulate growth in the economy. Because people have more access, they have cheap access to financing, and their cost of cost of funds will be low. And even with the fairly low rate of return, they can keep a fairly strong margin, make profit, and then reinvest. So it's a kind of snowballing effect on the economy theoretically. But of course, we cannot forget that there is a growing percentage of an aging population in Sri Lanka. We cannot actually forget them. We should not forget them. They live off the interest earnings. Almost 90% of the aging population in Sri Lanka, obviously in addition to their pension, or some people actually don't have pensions, their main source of income is interest income. So we have to have a balance between a reasonable interest rate. I think we should have a reasonable level of interest rates, because I am not an advocate where we request the banking sector or the non-banking sector to subsidize a particular section of the people. So I think we should have a reasonable interest rate which is kind of tied to the inflation level in Sri Lanka, so that both sides can be equally balanced.
Kapila, what would you say should be the priorities in the next national budget?
Priorities. Finally, I think we have stable political situation in this country. We have had a presidential election, we have had a general election, and at least for the next 5 years, we can see a stable political landscape. So that's very important for business. That's very important for the people. So what I expect from the budget would be consistent policies, consistent tax policies, consistent economic policies, consistent investment policies, where people can plan a long-term industry. So far, if you look at the last 10 years, we've had so many inconsistencies. You see, we come out with a policy and then we go back. So that's very, very bad for investment.
We're going for a short break now. We'll be right back after this. Welcome back to the show as we continue our discussion with the Group Managing Director and CEO of LOLC Holdings and the Deputy Chairman of Seylan Bank, Kapila Jayawardena. Now, Kapila, in a recent cover story interview for the Abacus magazine, you say that the country has handled the pandemic quite well. Now, we agree with you. But it also highlighted a number of bottlenecks and issues that the country faces. Now, how can the country get together and solve these issues?
Yes, I think that interview was done sometime back during the height of the pandemic. I think I also talked about the political instability that we were going through at that time. But I must tell you that almost all those issues have now been sorted out. So now, as I said earlier, I think the main focus of the government, the regulators, and all the other stakeholders should be in winning the economic war, because we have a situation where two of the pillars of our economy have been badly affected. The two pillars are the leisure industry, the tourism, and also the inward remittances sent by our expatriate workers. So those two pillars have been severely affected. So we have to, of course, there are reasons why the economy can surge ahead despite the problems we are seeing in these two areas, because the oil prices have dropped, exports have come back to pre-COVID levels. These are all very positive signs. But I think now we need to concentrate on rebuilding this economy in a very strategic way.
What's your take on the import ban? Right move at this point?
When the import ban was introduced, I thought that was the best thing that they could do under the circumstances, you see, because we had to conserve the little foreign currency, the little foreign reserves that we had compared to some of our peer group countries. Our reserves were at a relatively low position. So that action may have been taken to conserve the foreign currency. And also, as I mentioned earlier, we have two issues with the leisure sector and the migrant worker remittances. The import controls should continue in certain areas, but I think the government should be very selective, because there are certain areas which are complementary to imports. Like, obviously, our garment sector cannot run if the country doesn't import the fabric. When we open our airport, when all the tourists start coming in, we cannot run our 5-star and boutique hotel, you see the real top-end properties, the leisure properties, without importing certain components that is required by high-spending tourists. But I think the government has also been intelligent enough to look at them, look at it scientifically, and they are now allowing some of these to come in, but not the kind of the day-to-day motor vehicles and other things which are right now not critically required.
Just to go back to that point on the interest rates, also Kapila, the low interest rates were supposed to stimulate borrowing so that people can go out there and start new companies, start new businesses, new ventures. But do you actually see that happening?
Unfortunately not. Unfortunately not. Now, if you look at our banking system, we have, I think, the highest liquidity in history, 200 billion excess liquidity in the market, in the interbank market. So that's a big amount. So either the business community is very conservative, they don't want to invest right now. They are all on a wait and see attitude. The banks also very conservative, because after the steep rise in NPLs in the banking and non-banking sector, this sector has also become very conservative. You see, they are now more focused in recovery than on new lending. We talked about some of the reasons for that. You see, the country needed economic stability, the country needed political stability. So I feel that the next quarter, January to March quarter, we will see a uptick in borrowings, and then all the wheels will start turning in the business cycle.
Right. Now, I've asked this question from other guests on the show as well, Kapila, but let's talk about the SME sector. We keep saying it's the backbone of our economy, yet does not seem to be getting the push that it needs. In your opinion, with your experience, what do you think it is that we are doing wrong?
If you look at the traditional SME sector, they have been borrowing money from banks and finance companies and producing whatever that they want to produce, and the produce has always been bought by an intermediary. We don't see that in the corporate sector. The corporate sector goes directly to the end buyer. So that's a big difference between the corporate sector and the SME sector. So what we need here is to connect. I think all financial institutions have an obligation, because we have been doing a lot of work on this, to connect the producer with the end buyer. But I must tell you one thing, some really excellent development that I saw during the pandemic. We saw the middleman getting out and the producer going directly to the end buyer through various networks, through digital networks. Some of the more advanced SMEs put their products in websites and they marketed digitally. Some actually put them into trucks and vans and took them to the end buyer. So that's still working. I think that's a fantastic development. That's what should be done. So gradually we have to eliminate the middleman.
So as a final question then, how do you see the economy performing over the rest of the year?
I don't think people need to worry too much about the economy. We have seen the worst. It can only get better. I think the signals that are coming out are very good. Exports, as I mentioned, they are back to pre-COVID levels, $1 billion a month virtually. So that's a very good sign. So if we can get our country back on track in terms of the leisure business and continue with the managed import restriction environment, I feel that the future is going to be much better. Definitely 2021 in terms of GDP growth and increasing the depth of the economy will be far better than 2020.
Well, that was quite insightful. Thank you very much for joining us on the show, Kapila. It was a great pleasure.
Pleasure. All the best to you.
After a short break, Ashwini Vethakan will be back with an overview of Sri Lanka's manufacturing sector. Stay tuned.
Welcome back, I'm Ashwini Vethakan. Sri Lanka's GDP was estimated at $84 million in 2019, with the key sectors of services, industry and agriculture contributing to 57, 26 and 7% of GDP respectively. The tourism industry in the country too has been backward integrated and has forward linkages to other economic activities under the services and industry sectors. Such linkages were immensely disturbed by the Easter Sunday attacks, and their effects continued throughout that year. As such, manufacturing activities recorded slow growth of 1.9% in 2019 amid a contraction in the manufacture of rubber, plastic, wood and other products. However, the apparel and textile industry contributed positively to the overall growth of the manufacturing sector. Here's a look at the island's manufacturing report card for the past 6 months. The Manufacturing Purchasing Managers Index (PMI) in Sri Lanka declined to 64.6 in July from 67.3 in the previous month, still signaling a strong pace of expansion in the sector as manufacturing activities gradually approach pre-COVID levels. Production and new orders continue to grow at a stable rate, while the pace of job creation remains subdued. But stocks of purchases rose at a faster pace due to intended accumulation of stocks for further production, anticipating higher demand with the normalization of economic activities. This means that suppliers' delivery times continue to lengthen, but at a slower rate. The manufacturing PMI for Sri Lanka climbed to 67.3 in June from 49.3 in May, pointing to the strongest growth in the manufacturing sector since May 2015, as economic activity returned to normal after coronavirus-induced mobility restrictions were lifted. There was also a significant improvement in production, new orders and employment, especially in the manufacture of food and beverages, textile and wearing apparels, which are mainly supported by local demand. Industrial exports have long played a crucial role in Sri Lanka's economic output, even during periods of civil strife and macroeconomic instability. Over the years, an emphasis on export orientation has led to greater productivity and employment generation. However, a new wave of instability characterized by political uncertainty, currency depreciation and rising interest rates affected productivity towards the end of 2018, adversely affecting investment confidence and mitigating some of the nation's competitive advantages. While a number of challenges need to be addressed, the country's sophisticated manufacturing segment has gained recognition for quality, ethical practices and customization. The island's location and market structure have also allowed it to pursue niche production opportunities, marketing itself as a vital component in value chains or as an alternate manufacturing site. The sector underpins Sri Lanka's economy and is the prime force of value creation and innovation. However, it faces intense international competition. As such, lawmakers have formulated a mixture of policies to establish a more conducive business environment, while forging trade agreements and multilateral partnerships with the aim of raising total annual exports from 11.4 billion in 2017 to a 2020 target of 20 billion, as outlined in the 5-year National Export Strategy, which was initiated in 2018. While the manufacturing segment has a number of advantages, such as low labor costs, the country struggles to compete with the economies of scale in other regional manufacturing bases, such as China, Vietnam, and Bangladesh. As it stands, Sri Lanka does not have specific competition law, but it does have a framework in place to guard against unfair trade practices and unforeseen surges of imports. Ethical business policies have been implemented that have elevated Sri Lanka's international reputation, such as the Garments Without Guilt program, which promotes labor rights and environmentally friendly manufacturing and has been applauded for offering fair wages, good working conditions, and employing a skilled and educated workforce. With that in mind, the overall apparel business is becoming increasingly competitive, and this was seen even prior to the COVID-19 pandemic. High labor costs, trade barriers, and aggressive competition from low-cost destinations in the market are just a few reasons. However, the world has started to move towards destinations offering agility and scale. So whoever can offer faster, cheaper, and better solutions will win this battle. That's all we have for you this week. Don't forget to follow us on Facebook and subscribe to our YouTube channel. Thank you for watching and stay safe.